Everybody, and welcome back to another video. This is How to Invest, Spencer here, and this one is going to be on, not NEO, sorry, but Baidu. Now this is a Chinese stock, so just giving a forewarning for anyone who is not interested in them. But for those who are, let's get straight into it. So we always like to start off with the market capitalization. So we can see here they are worth $58 billion, and their stock price is currently $167. They've gone down a couple percent in the after hours. They're 164 now, about 3 points. And if we look at the stock chart on the quick view, we can see that they really kind of bounced off the 163 earlier in the day, and they're right back around the 164 range, so right around here. If we look at further into the chart, they have kind of slowed down their decline, so their deceleration has decreased. So they're really starting to form a good base here and have really kind of hit some support levels. If we look into the technical analysis, just a quick view here, these are just moving averages, and anytime you're looking at moving averages, you're looking at when the candles can break through multiple at one point, and they usually tend to go on a run afterwards, and then after they go on the run, you have to look for whether they're bouncing off of the moving averages or whether they break through them. So if we look here, they have really broken through a lot of the moving averages and fallen below them, and have been trying to break out of the cage, but have been unsuccessful. The most recent attempt was the end of June, the 29th here. You can see they peaked out at $200 and have been on a downward trend since. It looks like they bottomed out on the 27th and are starting to break through some of the moving averages here. We can see here they just broke through the 5-day moving average and are looking to make a move on the 10-day moving average, which is right about at $167. So if it continues to break through some of these moving averages and breaks out of all of them, that would be a very, very bullish sign if they can continue that uptrend. And then from there, you just have to see whether they're staying green on the candles, or if there are some red days in there, you have to just really tell if they're bouncing off of the moving averages or if they're going to break through. And you can do so by changing the interval and checking closer. I'm just doing daily charts to go back further, but if you're looking just on daily charts, you can do this too and look really as fine of an interval as you want. Give you a really good look into how the stock is doing technically. If you do not know, Baidu is a search engine company in China. They earn money by an online marketplace that introduces internet searches to customers who pay Baidu a fee on click-through rates and priority placements of their links. They also get ad revenue, which is very similar to Google. And the reason that Google is not the main player in China is just because of the highly nuanced languages that they have there. And there are a lot of subtleties that it would have been hard for a foreign company to come in and really understand what people would be typing in to a search engine, because it is very specific what someone would want to type into a search engine. Like what people type into Google is very what seems like random and odd, but Google has to take into account for this, and so does Baidu. And also, they are into autonomous driving, so they will be the first ever autonomous robotaxi network. They are coming out in May of next year and will be around for the Olympics, which will be hosted in Beijing. So this is honestly very, very cool and very bullish for me in their business model too, just because of there's a lot of hype around some of the EV players in that space, such as NIO, XPeng, and Li, but they are yet to release a fully autonomous car, and a search engine will be the first one to release it in China. This is also very similar to Google in the ways that they have Waymo, but Waymo is still pretty behind in autonomy compared to other makers, the main one being Tesla, considering Tesla is very, very close to fully autonomous themselves. If we look here at some of Baidu's statistics, we'll get away from the technical analysis. Sorry if you guys can hear the rain out there, it's pouring. Try not to pay attention to it too much. But if we look at their PE ratios, the trailing PE is a 7. So generally, right now, average for a NASDAQ stock in the US market is around mid to high 20s, maybe even 30s. So this is very, very bullish. Based off the trailing PE, this company could theoretically quadruple just based off of the price to earnings ratio. For the forward price to earnings, which is what people tend to look at more because this is what their future earnings will be rather than what their earnings that just happened. And people like to look at the stock market with a 3 to 6 month forward-looking lens, if not more, depending on the investor and how long of an investor you are. But this could easily double based off of stocks that are very similar to it. If we get into the financial highlights just a quick bit, they are a very, very profitable company when it comes to margin. Very, very high margin company. 42% and then 16% for operating margin and profit margin alike. And then if we look at they're making money hand over fist. They have so much money, they honestly don't even know what to do with it. $112 billion just in the past quarter. And this is a quarterly earnings growth year over year of 62,000%. That's not a typo. 62,000% growth year over year. Quarter over quarter, that's still 25%. That's still over 100% annualized, which is just incredible for a company at this stage, which could easily be worth way more, is all I'll leave it to. Their balance sheet is also phenomenal. Their total cash on hand is more than double their current debt. And their book value per share is extremely high. Anytime your book value per share is even half of the stock price, it is a very bullish sign because that is just showing how much per share, really how good the balance sheet is. And it's really just showing how strong of a company this is financially. If we compare this to some other companies that are similar to this, we look at Google, they have a market capitalization currently of almost $2 trillion at 1.8. And if we go to their price to earnings, it's currently double Baidu's. So I know that they are operating in the Chinese market, and some people have some fears and doubts based off the Chinese market. But just based off of the price to earnings alone, the stock could double and go up to over $100 billion. If we look at their profit margin, they have a higher margin in business than Google does. And it's almost double, which is very, very intriguing, which just shows that they are extremely efficient even when it comes to other extremely efficient companies. Now, Google did make double the revenue that they made in the past quarter, but Baidu's growing very, very quickly too. Their quarterly growth year over year was 61%, and which, if we compare it to Baidu's, was only 24, but this also had a base effect due to COVID. Google was hurt substantially due to COVID because of a lot of their revenue comes from ads based off travel, and as you guys know, there was no travel from the past year and a half, or next to none. But if we look at their quarterly earnings growth year over year, it is nowhere near Baidu's, which was over 60,000%. If we look at their balance sheet's phenomenal. They have actually a lot less debt than them, and a lot more cash. If we look at another company, Neo, which is in kind of a similar space because they're trying to go off after autonomous vehicles and autonomous driving and robo-taxi networks. They have a higher market cap than Baidu currently. And they don't make earnings on the bottom line. They don't have a price to earnings right now. I don't understand how this is possible. They're a price to sales company. if you don't know, people generally only like to use price to sales and price to book when evaluating a stock if the company doesn't make money on the bottom line, which is not an inherently bad thing, but it just shows that they're not profitable currently, and that it's just irrational for me to think that a company that makes over $100 billion can be worth less than a company that makes $22 billion currently, which in fact does have 400, almost 500% year-over-year growth, but their earnings is non-existent. And meanwhile, Baidu's growing their earnings substantially. This just does not make sense to me, and that is one of my main reasons on why I'm so bullish on Baidu. So if we go to kind of what my price targets are, I want to hold this stock until it doubles, so at least 300. And that was kind of my bullish thesis. If it continues to run after that, and there is a good steady chart without hitting 300 and within this current year, I would hope to have this over maybe 1 to 2 years, based off of some of the friction, and have more time to buy into this company due to the two countries. That would be great, but if not, I'm happy with what I have. And if you made it this far into the video, thank you very much for watching, and have a great day.